Good. So with that, we are done with the banking people. So we'll quickly run through the items that we discussed under the banking. We'll quickly run through it. Then we'll get into the second one, which is the insurance. So in banking people, we learn, where is that area? I think in the this gift. Okay. In banking, we learn banks will provide two kinds of services as per your syllabus people. Services related to the deposits. That means accounts, savings account, fixed deposit, current account. Services related to the electronic cash, debit card, credit card, and ATM cards. Then people, we move to the savings account. Savings account is in normal savings account where you can save the money, but interest rates are little low than the fixed deposits where you can deposit money anytime, withdraw money anytime. Then we move to the fixed deposit. Fixed deposit people, you will fix the money for a certain period and you will be given, you will get a certain amount of interest. Interest is relatively high than the savings account. If there is any urgent situation, you can get money from the fixed deposit. Then we move to the current account people. Current accounts generally businesses will use. For the current accounts only, you will get the checkbook. So using the checks, we can make the payments for the current account. So using the check, we can make the payments. So then we learn people about the check. Check is a legal document where we are using to make payments if you have a current account mainly. So with regarding a check, three parties are involved. Who are the three parties? Drawer, payee, drawee. Drawee is the person who is writing the check. Writing the check, that means the person who is having the account. Pay is the person, the name which is there on the check, the person who is getting the money. Drawee is the bank people. That means if I am writing a check, my bank. If I am writing a check from BOC bank, BOC bank. If I am writing a check of a commercial bank, commercial bank. Drawing. Then people, we looked at a check and we got the understanding about the check. Then we learned crossing people, general crossing and special crossing. General crossing people inside the double line. So if you just draw the double line people, it's a general crossing. You can write not negotiable or count payee. In that kind of situation, the person cannot take the money from the counter, from the cashier by presenting the check. Cashier malli may check salli, then you can't do it. If it is crossed. And people sometimes they will go for general special crossing. In special crossing, what will happen is inside the double line or without the double line, if they have written a name of a particular bank, we can get the money only from that particular bank. We can get the money only from that particular bank. So that is a special crossing. Then people endorsing a check. Endorsing a check means if one person gives another check to me, for me to endorse, for me to prove it as my check people, behind I will write my name and I will place my signature. That is endorsing a check. Then people, we discuss the services related to the electronic cash, credit card, debit card and ATMs. Credit card people, you are not using your money, you are using bank's money to make payments. So within given period, you have to settle it. If you didn't settle, you will have to pay interest. Debit card people, simply it is a card which is connected to your account where you can use that card to make the payments, but you are using your money. Once your money is over, gone. Then you have to fill your account again to make the payments. Then we move to the ATM cards people where you can do the transactions and you can withdraw money through the ATMs. But people, the thing is you can't make international payments through the ATM cards. Credit card, debit card, you can make international payments like using Visa platform, Amex is there. These are services who are helping to make international payments. The businesses who are helping to make international payments. Visa, Amex, Master. So these businesses are helping to make international payments. But if you have an ATM card, you can't get that service because for ATM cards, you don't get that international payment making service level. So those are the areas that we discussed in that one people. Then we learned certain advantages and disadvantages. Now let's move to the next one, which is the insurance. What is this insurance, Lamai? Very simple. Insurance is, in simple terms, pooling the risks. Pooling the risk. Let's take an example. Listen carefully. So I think yes. We'll assume this is your car. This is your car. You met with an accident. Big damage for the car. To make it, you have to spend 2 million. Big amount. You have to pocket out. You will not be able to tolerate. You will not be able to bear it. 2 million to big amount. So what insurance companies they does, they will find people who have these cars and they will ask to make a payment for them. Okay. We'll assume 10 people, 10 parties. And they will collect money from them. What they will say, okay, each person pay me 200,000 every year. 200,000, 200,000, 200,000, Tunai, 200,000, Hatarai, 200,000, Pahai, 200,000, Hayai, 200,000, Savan, 200,000, 8, 200,000, 9, 200,000, 10. Likewise, 10 people are there. Where all these parties are giving this money to insurance company. So, person A is there, person B is there, person C is there, D is there, E is there, F, G, H, I, J, all these parties are there. We'll assume the car which got accident is the C's car. Now you see the damage value. The value of the damage is 2 million. But the 2 million, C will not be required to pay because he has taken insurance. So who will pay this 2 million? Insurance company will pay this 2 million. How are they paying? Using all these money. Now we can't say no people, all 10 parties vehicles will get accident. Won't happen. Sometimes certain people are there when they are driving very cautious, very careful, where they have not met with any accidents in their lives. Certain people are there. Zero accidents. So people, what you have to understand, now if you didn't take this insurance, if you have not insured your vehicle, when the vehicle met with accident, when it got damaged, the 2 million you had to pocket out. ඔයා 2 million ගෙවන්න ඕනේ. You have to pay the entire 2 million. Sometimes car value may be only 4 million. Car value. So what insurance company they did was they collected money from all the parties and they supported you. We can't say no, every year you will meet with accident. We can't say that. Then maybe once in life. Now next year maybe he met with an accident. So every year you have to pay this 200,000. So using that whatever the money pool that they have, they will support E. Because as one person, bearing this entire cost is not easier. Think about as a one person bearing this entire cost is not easy. So people will give their money to this company, insurance company. Insurance company using that money, they will make the car and give. If not, they will pass the money to make the car. Maybe in another 2 years time, this person met with an accident. Fine. Because he met with an accident, he is not required to pay, and I will assume for his accident, the damage is 1 million. He is not required to spend 1 million because he has taken insurance. Insurance company will support using all our money. So we are working together. Without knowing, we are working together. If my car met with an accident, in order to make my car, insurance company is giving money. उनके साली ने मेरी. Other car owners' money, they will collect it and they will give it to me. Because I am in such a situation. Sometimes one of other person's car will meet with an accident. So they will take everyone's money, including my money, and they will support them to make the car. So that is what insurance is. Pooling the risk. Because as one person can't tolerate this, can't bear it. Vadi, tarunu vadi, million deka kamaru. Now you might have a question. So, sir, if we didn't get accident in our life, whatever the amount that we pay, yes, what to do? Can't tell. So certain people are there, what they will do, I'll just tell you. කරන්න යන්න එපා. Ethical නැහැ. Not ethical. Okay. If they want to maybe paint their car, we'll assume. So to do a painting, it will cost like maybe 75,000 or 1 lakh. Okay. What they will do purposely, they will go and scratch their car somewhere. Maybe for a light post. Purposely. ඒගොල්ලොම ගෙනියලා වාහනේ අතුල්ල ගන්න. They will say insurance company, they will call insurance company here, see my vehicle got accident. I scratched my car for a light post. So can you support me to make it purposely? Certain people are there like that. Everything ethical there. What goes around will comes around. No, someday you will have to face the returns and consequences for those things. So now let's get back to the topic. So this is what insurers mean. Pooling the risk. Pooling the risk. So what I explained you now, it's about the vehicle insurance. Life insurance is there now. It's something different. So we'll learn about life insurance after writing the note. So let's get into the note, Lamai. Let's quickly run through it. A common element or characteristic of any business is that to face risk. Certain risk, the impact can be low, whereas certain risk impact can be very high, affecting the business and its operation. Like here, people, 2 million means big company. It is impossible to identify with certainty when or where these risks would occur. We don't know when and where it can occur, like earthquakes, floods, tsunamis. It is very important for businesses to adapt methods to minimize and reduce the impact of this risk. Hence, insurance institution will provide a systematic approach to reduce this risk because they are simply pooling the risk. Insurance is an agreement between two parties where losses of one party are shared collectively. Insurance is an agreement between two parties where losses of one party. අර මං කිව්වේ ඉස්සෙල්ලා. මෙන්න මේ පාටිගේ loss එක shared collectively. එකතු වෙලා share කරනවා. Shared collectively. Insurance is known as a pool of risk as it accumulates the risk of all into single insurance fund. The same story which I told you right. So when it comes to insurance lamai, there are three parties who are involved. First we'll write about these three parties. After that I'll explain. First one. First part. First part. The party who obtains the insurance cover. The insurance cover. We will call it as insured part. Insured part. Next one, second part. Second part. The party who provides the insurance coverage. The party who provides the insurance coverage. We'll call it as insurer. Insurer. In other terms, lamai the insurance company. Insurance company. And next one, third part. Third party. All the other parties and properties will be affected by an insurance contract. Example, passenger. Other vehicle. Other vehicle. So these are the three parties who are involved in insurance lamai. First one, first party. First party means if I have taken an insurance, me, the person who has taken the insurance. Second party means insurance company. Third party means the passengers and other vehicles. The passengers and other vehicles. That is what third party. If you all are done, post the letter D in the chat box. Done. So people, now when it comes to insurance, there are certain important words or concepts or principles that you should know about the insurance law. So these are highly tested areas. These words. What is insurable interest? What is utmost good faith? What is indemnity? So very important thing. First we'll write the note. After that I'll explain it to you. After that I'll explain it. Insurable interest. The legal right to obtain an insurance coverage for a property. Property means people. It can be a business, it can be a building, it can be a stock, it can be a vehicle, anything. Okay. For a property or life is known as insurable interest. Insurable interest. Simply people, insurable interest means a person who is having an interest to get the insurance. The person who is having an interest to get the insurance. So let me give you an example. You write this example also. Write this example also. In property insurance, the legal owner of the property has the insurable interest. So if I have a car, I have the interest to get the insurance for my car because it's my car. If I have a building, I have the interest to get the insurance for that building. The legal right to obtain an insurance coverage. The legal right that I have to take the insurance coverage. I own that car, so I have interest on that car. So I have the legal right to take an insurance for that. I have the legal right to take an insurance for that. So I am asking you a question. Important thing, important question for your syllabus. Husband, wife, okay. One person, do they have interest over other person? Yes or no? One person, do they have interest over other person? Yes or no? Tell me with important question. Husband and wife. One person, Does he or she has the interest over other person? Yes. Then one person can take the insurance for the other person? Yes. Legally they are husband and wife. They can take. Possible. Possible. Next one. Second one, utmost good faith. Utmost good faith. Write it, people. So I'll type it rather than write it. For me, it's easy to type. This principle states that both the parties to the insurance contract should disclose all the relevant information accurately for the contract. If any party failing to do so will be a breach of utmost good faith. Utmost good faith, then they will have legal right to cancel the insurance. So what is this utmost good faith? Very simple. Do not lie, give all the information. Simple terms. Do not lie, give all the information. We'll assume you are taking a life insurance. When you are taking a life insurance, that person is asking, have you done any heart surgeries? You are telling no. You have done, but you are telling no. Boruni. If the insurance company get to know about it, they can cancel. They can cancel the issue. So utmost good faith means very simple. In simple terms, do not lie. Give all the relevant information without missing. That is the second. And the third one, indemnity. Write down for the indemnity. This principle states that if a loss occurs to an insured property, the compensation should be paid. The compensation should be paid to get the property back to previous state. This is not applicable for life insurance. Just write an example. Example. If a rupees 2 million worth car got damaged and damage value is estimated as rupees 500,000, then insurance company should pay only only maximum up to rupees 500,000. So that what indemnity is. Indemnity means very simple, Lamai, again. Pay for the damaged value. If the damage is 1 lakh, pay 1 lakh. Don't pay 150. If the damage is 4 lakhs, pay only 4 lakhs, not 5 lakhs. If the damage is 3 lakhs, pay only 3 lakhs. If a life is damaged, if someone died, can we have a value for a life? Can't. That's why this indemnity principle is not applicable for life insurance. This indemnity principle is not applicable for life insurance. So people, if you take the property insurance and life insurance, property and life insurance, first one, insurable interest. That principle is there for property insurance. That principle is there for life insurance. Second one, utmost good faith. It is there for property insurance. It is there for life insurance. Third one, indemnity. It's there for property insurance, but it's not there for life insurance. ඔය table එකත් අදගන්න. Draw that table also ළමයි. Once you are done, let me know, people. Okay. Now let's move to the next one, which is the life insurance. So life insurance in simple terms, insurance for the life. If you die early than expected, your other party can get the money. Simple as that. We'll assume you are married. We are estimating you will, estimation, no? You are estimating you will live until 60. You are dying at 55. Premature. Premature death. Marinawa Kali. Okay. Then whatever the insurance amount that you have taken up with the insurance company, it will go to your wife. But there are certain situations, people, where insurance money can be used for other circumstances also. Mono circumstances the kila abibala. We'll see. So example I am telling. Example. This is Sunil. This is Sunil's wife. Sunil's wife. This is the insurance company. So Sunil is having an insurance paper for maybe 10 million. And they're estimating, they are signing the agreement until maybe 60. They're estimating Sunil will live here. Okay. So every year, Sunil, what he will do, if not every month, he will pay a certain amount and come. Maybe like 50,000 or 20,000 or 30,000. Every month he will pay and come to the insurance. We'll assume he is dying dead at the age of 55. Wife can come and get this money. Simple. Wife can come and get this money. Simple as. So certain situations are there which is there in the courts, people where wife purposely killed the husband to get the insurance money. Those kind of scenes are also there. So you will study those kind of case studies, people, when you are doing higher education, maybe when it's come to a subject like law subject, where business law, these things are connected, no? Connected to the business world. No? So under the business law, you will study these kind of things. ඔයාගේ cases තියෙනවා ගොඩක්. Famous cases happen. So whatever the money that he is collecting, we'll assume when he is dying, he has saved only 6 million කියලා. But still the insurance company will pay that 10 million. If not, from the 6 million, if he needs to make certain hospital payments, certain covers are there, they can take it. They can take it. So you can use the life insurance as a savings also. Certain insurance companies are there, they will give you interest also. Because a longer period, very long period, it's not like a car getting accident and repairing the car again. No. Here one time knockout, gone, finish. You can't take it back again. You can't replace another engine. You can't replace another body like that. You can't repair it again. We can't estimate a value for your life. Extra getcha I got. Ekapar. Since it is long term, so you can keep it as a savings also, where insurance companies are paying interest also for that. They are paying interest also. Life insurance is associated with the risk related to the life of an individual. If An insured individual. Insured කියන්නේ people කවුද? Insurance එක ගත් එක්කෙනා. The person who took the insurance. Insurer. Rrr. Insurer කියන්නේ insurance company. අමතක කරන්න එපා. Insurance company. Individual dies. The compensation from the life insurance can be obtained by any related parties of the insurance individual. This is also applicable for any accidents, surgeries, health issues, hospital charges, and many more under the life insurance contract. So different contracts are there, people. Certain contracts are there where if we met with an accident, we can get that money. Maybe for your hospital bills, you can get it. So different contracts are there. No. So for small maybe udata, cassette. Let's say you are going to take some medicine for that. Will the insurance company pay? Listen carefully. Depends. Depends. Certain contracts are there where it is covering those things also. Lankawe naha. So in lot of countries, what they will do, they will go for something called not the life insurance, we will call it. Health insurance ke liye separate. Health insurance. So in the health insurance cover, ඔය මේ පැස්සක් ආවොත් උඩක් ආවොත් සෙමක් ආවොත් for those kind of things they are covering. That is a health insurance. Life insurance, life matters. Okay, got it? So we'll write sir, importance of life insurance. Importance. If the insured party survives until the policy matures, means insurance period is over. Insurance period is over. Then insured party can obtain the value and other benefits. So what is this lamai? Now I told you here in life insurance they will do an estimation like you will live until 60 wage කියලා. Somehow if you pass 60, you can go and get the money. You, not your wife, not the person that you assign. You can go and get the money. Unless you pass 60, you can go and get the money. You can go and get the money. Can be used as a method of savings or investment. Can obtain financial support in marriage or education of children. That means people will assume you have an insurance, you have a son. For your son education purpose, you need money. You can take it. You can take it. If not, you can keep that insurance as a security. You can take a loan also. Like that. Can be used as a security, security or collateral when taking a loan. So when you are taking a loan for the bank, you have to show security. No, lamai. I will assume you are taking a house loan. Bank will keep the deed of the house with it. You are taking a vehicle loan. Vehicle registration document books will be there with the bank on. You will just have the key. Likewise, when you are taking a loan, they will have some kind of security with them, unless it is a personal loan. Okay, now let's move to the next one, property insurance. So what is this property, people? Taking insurance for building or machine or vehicle, whatever. These are, or for a stock. These are property insurance limit. So I'll give you certain types of property insurance, people. There are many forms of policies under the property insurance. I'll give you few. Maybe you can go for a fire insurance. Fire. These are different types of policies that you have. Motor insurance. Marine. Marine කියන්නේ sea, yeah? Sea. Insurance. ඔය ship වලට එම ගන්න ඕක තමයි. Insurance for natural disasters. Natural disasters. So we'll assume, let's take an example. Theft insurance. ඒවා ගොඩක් තියෙනවා. Theft insurance. Theft insurance. Theft insurance. So we'll assume you have taken a fire insurance for your building. Okay. Tsunami is coming. Building collapse. Will you get the insurance? No. Because you have taken a fire insurance, no? Not a natural disaster insurance. Not a tsunami insurance. So likewise, there are certain complications also. We'll assume you have taken a flood insurance. You have taken only flood insurance. But your stock is getting damaged, building is getting damaged due to the fire. They will come and check, building is damaged because of the fire. You have taken only flood insurance. Insurance දෙන්න බෑ. Flood එකක් ආව නම් කියන්න. There is a flood, tell us. It's not a flood, no, it's a fire. Bye bye. Complications are there. So these things are important when you are running a business someday. දැන් ඉතින් ඉගෙන ගන්න. Business එකක් run කරද්දි මේවා ඉතින් important. So we'll write few importance. of property insurance. Cover the financial losses arising from various risks. Facilitate in conducting business operation continuously. If a business face a huge damage, businessman will not have the capacity to get it back. In these kind of situations, insurance company will provide insurance compensation to get the business back to running condition. Support both domestic and international trade activities, such as marine insurance, export credit insurance, goods in transit insurance. So what is this third point, people? Now, we'll assume you are importing certain items from China. So they will ship it. So ship is coming in the sea. Something happening to the ship. The ship is getting collapsed. Your container is now floating on the sea. You can't get the items. See, no way, we can't say what will happen. So people, to eliminate that risk, businesses will take this insurance connected with the imports, marine insurance, good transit insurance. So if something happens, because not small quantities also you will import from the ship, no, big quantities, millions of amount worth items. You just think and see a ship which is carrying vehicles, Lamborghini, 10 Lamborghinis. Finished. If something happened to those vehicles, Lamborghinis, because of some problem, natural disaster, that business person is gone. No? He will have to suicide because all his money will be gone. So at that situation, people, it's better to have an insurance for these marine activities that you are doing. Okay. Now we'll write certain differences between life insurance and property insurance. Lamai. Put down a table. Put down a table. One side life insurance, other side property insurance. The value of the insurance policy depends on the risk of life and insured's ability to pay. The insurance premium. Insurance premium means insurance installment, insurance payment. So people, if I have money where I can, if I want, I can put 1 million every month to the insurance and keep. If you don't have money, even still you can go for maybe 20,000, 10,000 one also. Depends on your capacity. Here people, value of the insurance policy will depends on the value of the property. The value of the insurance, the value of the insurance will depend on the value of the property. Value of the property. Here principle of indemnity is not applicable. Not applicable. Principle of indemnity is applicable. What is this principle of indemnity, people? I told you we have to pay the amount, or the insurance company should pay the amount only for the damage amount. If only 500,000 damage, only 500,000 to be paid. But for life, there is no value, nilamai. Benefits such as bonuses, interest will be given. No any additional benefits. No any additional benefits. Give me a second, people. Hello. Hello. Okay, people. So can you all do the question number 6 quickly? Question number 6. State whether followings are true or false. Life insurance covers the risk related to the life of an individual. The insurance collectively shares the losses of a participating party to an insurance fund among all the participating parties of the fund. The insurance collectively shares the loss of a participating party to an insurance fund, yes, among all the participating parties to a fund, yes, correct. When a property or life is insured, the risk of those will be eliminated. No, no, Lavan. Just because you insure it, risk will not be eliminated. No? The risk will be there. The risk will be there. It will not be eliminated. The risk will be there. There it is shared between different people. So it is a false state. The value of the property insurance will be determined by the willingness and the ability to pay. No, that's not the property insurance, Lamai. That is the life insurance. False. When obtaining an insurance policy, the insured, that means the person who is taking the insurance, the insurer, that means the insurance company, should disclose all relevant information. True or false? What principle? Utmost good faith. They must disclose, should disclose. When a vehicle is insured for 2.5 million as a compensation, the entire rupees 2.5 million can be obtained in the case of loss estimated 1 million. No. Property insurance only for the loss amount. Principle of indemnity. Principle of indemnity. So you can't take the full amount. You can take only 1 million. Indemnity principle does not apply for the life insurance. Yes, true. An individual has the legal right to insure any relative. Yes, true. Because they have the interest. They have the interest. Done. Now let's move to the next one, which is the communication. Communication. So communication, is it something important for a business? Yes, it is very, very important. So what is communication, people? In simple terms, exchange of the messages, information and ideas between one party and another party in some kind of form, in some kind of medium. That is what communication is. So we are going to get an understanding about this communication law. So communication, simple terms. Don't complicate the things. There one party is exchanging their message, their ideas, their thoughts with another party. Exchange, exchange, exchange. Using some kind of media. Media can be a letter, media can be a phone, media can be Zoom, media can be anything. Using some form of media. So this communication, people, in your syllabus, you are going to focus on two different aspects. One is the internal communication. And second one, external communication. Internal communication and external communication. So let's get an understanding about this internal communication and external communication after writing this note. Right, for the internal communication. This means communicating messages, communicating messages, information, ideas via different mediums between different parties, between different parties. This is the important one. Within the organization, within, inside, within the organization, within the organization, within the organization. Organization එක ඇතුලේ. Within the organization, whatever the idea sharing, message sharing, that is what internal communication is. Example right now. Example, communication between managers, directors, and other employees. Other employees. So internal communication means where you are communicating with the buggers within the organization. So now let's write for external communication. External communication. This means communicating messages, information, ideas via different mediums between business, between business and some external parties. Some external parties. Example, communication between business and suppliers, customers, government agents, etc. Okay. Now let's learn about this communication process. So don't memorize these things. Huh? Simply understand what can be there in a communication process. What can be there? First, there should be a person who is sending the message. Okay. There should be a person who is sending the message. And there should be a message. And some media should be there for the message. And there should be a receiver for the message. And there should be a response for the message. And there should be a feedback for the message. So let's take an example. Let's take an example. I am telling, this is your mom. This is you. This is you. Okay. So mom is sending a message to you. Mom is sending a message to you. Kanna enna. Kanna enna. Okay. You are there inside your room. Mom is sending a message to you. Kanna enna. Kanna enna means she is asking you to come and eat. Okay. So mom is the sender. Mom is the sender. So what she is sending? The message. So this is what she is sending, the message. Mom is the sender. Okay. So how she is sending? How she is sending? Through WhatsApp. Through WhatsApp. Mom is sending through WhatsApp. Okay. So WhatsApp is the medium. WhatsApp is the medium. Then you are there. You. Now you are there. You are getting the message now. You are getting the message. So you are the receiver. You are the receiver. Okay. You are the receiver. Now you are getting this notification. Notification එක ආපු අම්මෝ අප message එකක් යවලා. අම්මා message එකක් යවලා. You will get that excitement. You will get that excitement. Okay, mom has sent a message. Mom has sent a message. Okay. So now you will reply to her. Now you will send a reply to her. So that is response and feedback. Response and feedback. So this is the complete process of the communication. This is the complete process of the communication. A sender should be there. Message should be there. A medium should be there. A sender will send a message using a medium to a receiver. Receiver will get the message and will respond and will provide a feedback. So let's write down that, Lama. Let's write down that. Send. Message. Medium. Receiver. Response. Feedback. Response, feedback. So we'll write for each and every item. Party who send the message. The party who send the message. Information included in the message by the sender. That is the message. Communication medium. Communication medium used for sending message. Receiver, party who received the message. Party who received the message. Reaction or response. Reaction කියලා කියනවා, response කියලා කියනවා. Or response. How the receiver act on the message. Feedback, reply for the message from receiver to sender. Finally A arrow එකක් දාගන්න. මෙහෙම. Final feedback will go to the sender again, going it back. Not, you can change it nicely. හොඳ ලස්සනට ලියන්න පුළුවන්. Receiver response, like how you are reacting for the message. අම්බු අම්ම message එකක් යවලා, then you will send the feedback. What's the feedback? Okay අම්මේ කන්න එන්න. Okay අම්මේ කන්න එන්න. That's the feedback. Okay අම්මේ කන්න එන්න. That's the feedback. Okay, people. So we'll stop the session for the day. We have to do the communication medium. A small area is there. Okay. Communication medium and factors to consider. First one, people, we have to look at the communication medium. I'll write and keep types of mediums. Types. We have to look at the types, people. Different sources, mediums are there. Nature of whatever the communication that we are doing. and the factors that we have to consider. Let's look at that next week. Tata, bye. We'll meet again next. Bye.